Is real estate really a safe investment? I mean, the world is changing dramatically. Technology is changing. Is real estate changing? Today here on Limitless Wealth TV, me and Stephen Michael Miller are going to break down real estate, and we're really going to get into the nuts and bolts and brass tacks of whether or not it's a safe place for you to be or not. Real estate, a safe investment? This is such a great question, and I don't know if you're asking the right guys here, right? Because if you ask your financial planners or your tax advisors, you're going to get a lot of people out there going to say, don't do real estate. But you're talking to guys here that have done nearly $1 billion worth of real estate. So we're a little bit biased. But what we're going to do is we're going to share with you the information that creates that bias for us so that you can understand. Because up front, you got to understand something. Does real estate have risk? Yes. Sure. But here's the facts of life when it comes to money. This is the birds and the bees of money. If you want to become financially, you weren't expecting that I was going to say.
I wasn't expecting
the birds and the bees of financial life is that.
Don't pollinate your money?
No, we want to pollinate the money. We want to multiply it like crazy.
We do want to pollinate.
Yes, we want to vermehren this. So that's German for multiply.
I love it.
Okay, so you got to understand that if you don't take risks, you are guaranteed to fail.
Yeah.
Like if you got a great paying job, I'm talking about you got a multiple six-figure job and you're an incredible saver. You might be able to save enough money with taking very little to no risk, just putting money under the mattress, securities, bonds, real basic financial instruments.
Yeah, I mean, if you're learning how to live on half of your income and you're saving the other half, you might do okay if you do that for 40 years.
Yes, and then when you retire, it's not going to be like a grand retirement, but you know what? You're going to financially survive. Hands down, yes, you are. Here's the reality. To get where you want to go, you're going to have to take risk. But there's intelligent risk, and then there's like Vegas risk. And so what we want to do is we want to talk about real estate and talk about what its real risks are, how you mitigate those risks as a bonus to the video, and really help you understand why are people investing in real estate anyway.
So the question is it safe to invest in real estate? And that safety question, I don't want to overly blanket or stereotype anybody, but I'm married and I've been around a lot of women in my life. I've had a mother and have 4 daughters and cousins and friends. And I think this idea of safety and security is predominantly a female. I mean, it's driven by females a lot.
Well, and I'll tell you, we've met enough couples that one of the two, whether it's the man or the woman or the however, there's at least one person in the relationship.
Don't beat me up here over this, okay? I'm not.
There's going to be at least. Don't worry, Stephen. I'm trying to save you.
I'm not being sexist. No, I want to address this though because
there is that nesting instinct.
Sure.
There is that desire for having safety, and they're not always thinking, who cares about financial security? We got to make sure that we got things covered today.
Absolutely.
And in any relationships, there's always going to be at least one person.
Thank you for saving me.
That plays it safe.
So safety and security is something that all people want. Is that better? Mm-hmm. It's something that all people want. But the way that they go about it and the way that they get it is often really misguided and misunderstood. So think about this for just a moment. Let's think about what the world thinks as safe. Now, the world says it's safe to buy your home and to pay it off as quickly as you possibly can. Like, just pay it off. It's also safe to put your money in a 401k. Like, those are what the world will tell you are safe investments. Your own home, the 401k. Now let's look at history for just a moment. Will your 401k ever truly be able to retire you well?
No.
No. Will your home, if you pay it off, does your home pay you once you've got it paid off?
No.
No. So at the end of a 30 or 40 year or 50 year working career, if all you have to show for it is a meager 401k and a paid off home,
then you're going to have to plunder them.
Are you safe?
No, because you have to pillage them.
No, you. Here's the thing. You know what's going to happen. And you were talking about risk here just a second ago, Kris. You know that it's riskier to put your money in your own home and in a 401k. That is actually riskier because at the end of the day, you know exactly what it's going to produce for you, which will be not enough.
Yeah. So it's interesting. We know we need to take risk, but now we need to take calculated risk. We need to take smart risk. And I want to be clear. Stephen said this. If we're talking about real estate and just dropping a blanket over all of it, I do not believe in most real estate is a good investment for the average consumer, the average beginner investor, and someone trying to get somewhere. Commercial can be risky as anything. Skyscrapers cost too much to get into. You could go dump a bunch of money in storage units and never get them performing the way you want. There's a lot of risky real estate out there. And so I think the first thing to focus on is that it comes down to strategy. Because in real estate, there's hyper risky strategies, and then there's near risk-free strategies. And Steven and I have found what we believe to be a really, really good balance. There's only a handful of strategies that we really recommend when it comes to lease options, partnering, buying in the nation's hottest markets, leveraging a team and track record. There's things that we'll do, single-family homes, purchase below the median. There's even some commercial deals, but they go through a very specific filter. So yes, real estate can be risky, but if you work with a team with a track record or you've got the right strategy and philosophy, it can work out really, really well for you. There are predominantly 4 things that you want to be aware of that makes real estate so attractive compared to other investments. Number 1, taxes. Taxes have the ability to erode our investments over time like crazy. They will rob us the majority of our wealth. Now, by the way, I believe in paying taxes, but I also believe in using all the proper tax loopholes. So real estate gives you 3 biggies. The first one is you get to write off all the interest. Number 2, you get to write off depreciation. And then number 3, you actually also get to write off your business expenses. If you don't understand what those 3 are, just super quick. When you pay a mortgage and you're collecting rent, you're getting income, but you have an expense. The interest, you get to write off, which ends up making a big difference on sometimes making money on your real estate, but showing a loss. This is a good thing in the tax world. Making money, real money, money you keep and eat or save, but money that you're actually not paying to taxes. Number 2 is depreciation.
Money.
It's delicious, right? You like that.
The second one, oh wait, are you going?
No, I just want to hit depreciation
Okay, yes.
real quick. So depreciation means, and by the way, they just enhanced the tax code that allows you to write off way more depreciation 1 year front up some. I mean, you can write off a ton of depreciation on that property up front. These are huge tax benefits. So depreciation is if I have a $100,000 house, I get to write it off, let's say over 27 years. Every year I get to add $3,000 extra dollars I write off per property. That's going to keep you from paying taxes and yet making money. And then of course you can have business write-offs. I think you get what that is. So that's the first of the 4 bigs.
And I don't know if we want to hit a disclaimer real quick. We are not tax professionals or tax advisors. We do not give tax advice.
No
Okay,
legal advice or any advice. This isn't advice.
This is no advice.
This is just
opinion.
information.
Awesome opinion. All right, let's go on to the second reason why real estate is a safe, or what we would consider a safe investment. With real estate, you can leverage. And I know, like I get it. A lot of people think that leverage is horrible and risky and, oh, that's crazy. Leverage is one of the safest things you can do because you're putting a portion of your money in to receive all of the benefits, right?
Yeah.
In other words, I can't go to the stock market and say, hey, let me put, I want to buy $100,000 worth of stock, but I'm only going to put $20,000 in, but I want the benefits as though I had the whole $100,000 worth of stock.
Yeah.
Stock market won't do that for you.
You guys, you can't do that anywhere.
You can't do that anywhere.
But you got to understand that you can abuse that leverage. If you're putting leverage on $1 million house, prepare to lose lots of money. If you're putting leverage, if you don't have a right strategy,
Again, strategy.
it's going to bury you. But you got that strategy on a single family home priced below the median, $200,000 house, entry level house in some of the best and safest markets around the country, then leverage, it's going to make you a ton of money. I mean, think what leverage is. Imagine I'm trying to move something impossible. My big fireplace man's right there. It weighs so much, it's impossible. But if I had a long enough lever, and if I was on the other end, I could move it with my pinky and tear this whole house down. So leverage with the right strategy is incredibly powerful.
Yeah, absolutely. So the third one here is appreciation.
Yeah, your assets are going to grow.
Assets are going to grow.
They're going to go. They're going to go up. They're going to go down. Yeah. But over time, they do what?
They always go up.
They always go up. And by the way, they move in cycles. The cycles help you mitigate the risk so that you can understand timing on real estate, when to buy, when to sell. And by the way, just a little hint here. When everyone is selling, it's a really good time to
buy.
And when everyone is buying, it's an excellent time to be
selling.
All right. So understand that as a sophisticated investor, you're always going to be moving contrary to the populace.
Counter-cyclically.
Boom. So appreciation, we don't count on it, but you need to account for it. It is going to happen in the longer commitment and strategy you have into real estate. It's going to actually be a big part of your winnings, but only a part, depending on strategy. And then the fourth one that I want to talk about here is that in most investing, it's highly speculative. I'm going to put my money here, and I hope it gets me something, right? Every 3 out of 4 years, the market is up in the stock market. So my 401k, I'm going to be up every 3 out of every 4 years. But every 4th year, guess what? I'm going to take a dive. Every 5 to 8 years, there's a really big correction. It takes 2 or 3 years to come back from that. And so financially, you got to understand that most things that you invest in, you put your money in, and you're speculating over time that you're going to get your money back. But in real estate, while we are maybe speculating that the market will go up, even though it has like a 3,000-year track record on doing that, the benefit that we get is real estate gives us something along the way. It's real property that can be rented that produces income. Income producing property, I mean, are there income producing stocks? No. Are there income producing 401k? No. Income producing IRA? No. Most investments are not income producing. So real estate not only uses this incredible benefit of leverage, but you're also getting this income component. And by the way, the income component alone with the right strategy can make this incredibly awesome.
So I want to talk about this speculation here for just a moment, because I think this is important. First of all, if you're going to do real estate, do the type that is not speculative in nature. This is what we really focus on, is doing that real estate that is safer, that has less risk, that is not speculative. But I want to speak to the speculation for a moment, because speculation is what drives and oftentimes what kills economies.
Yep.
Okay, so let's just talk about it for a second. In the real estate markets, and even in speculation within real estate, you've got what happens is when the markets go down, those that know, those that are in the know, the experts will jump in. Like the small percentage of people that know what they're doing will jump in. When the markets crash, Kris, what did we do? We went to those markets that had crashed the hardest.
We're buying as much real estate as we possibly can.
And we jumped in and we bought as much as we possibly could.
You're buying homes in Phoenix and Vegas for under $100,000 that we're selling for $200,000-$300,000.
We were a first mover. Now, as a first mover, people are speculative. People were speculative of what we were doing, okay? They were weary about it. They were leery. They were like, this seems strange. So they held off because of their speculation, okay? They held off for a while, and then the market grew. They still held off for a while. Then the market grew more. They still don't know if this is safe enough. They held off until the market had turned almost around. Then those speculators, those that were the most speculative in the beginning, most skeptical in the beginning, right, decided finally, okay, maybe I'll jump in now.
Oh, it's amazing.
Thinking and hoping that it was going to continue to increase and rise.
Dude, it's so amazing. The skeptical consumer is the opposite of the sophisticated investor. So by the way, once the skeptic gets involved, you better be running for the hills, because there's a reason why they're skeptical. They keep getting spanked in life, and they're about to get spanked again. But by the way, when the skeptic says, there's no way I'm going to do that, guess what the sophisticated investors are doing?
I'm in.
They're pouncing all over it.
So the point is skepticism and speculation oftentimes go hand in hand.
Now, I do want to say something. In real estate and in business and in financial life, you got to be pessimistic.
Yeah.
I want to be really clear. I don't mean negative. I don't mean skeptical in a negative way. What I mean is you can't afford to be optimistic when it comes to money. When it comes to real estate, you need to be able to look at it and say, how am I going to lose money? This is one of the best questions that you can ask. You should write it down. I got this from my billionaire mentor. He said, how am I going to lose money? Anytime I look at an investment, I'm asking, how am I going to lose? Show me how I'm going to lose money, or show me how we can't lose money. Because now we're actually looking at it like a business. Because by the way, can you lose money in real estate? Yes, we're not here to tell you to be optimistic and that it's all roses. We're saying with the right strategy and understanding it, you can win long term, because we've been winning and thousands of our clients have been winning with us along our side. So today, friends, we talked about, is real estate a safe investment? For us, when we rank, I've got 20 different asset classes that I invest in. And real estate is ranked amongst the safest, but it's asymmetrical in risk. That means that it has very high upside, it has very low downside with the right strategy. Are you hearing that theme today? Yes, we're talking about tax benefits. Yes, we're talking about leverage. Yes, we're talking about growth and appreciation. Yes, we're talking about income producing investments. Those are all things that make real estate unique, stand out, and absolutely incredible. But it's all contingent on what? Strategy. So our advice is, if you're liking this video, subscribe, check out some of the other things that we talk about here. And when you feel like you're ready to figure out, Kris, what do you mean real estate is asymmetrical? How do we actually jump in and get in on real estate that has some of the highest gains but very low risk? Head over to our website, check out the different options that we lay out there, because Stephen and I, we have our YouTube friends that come and partner with us and invest with us all the time. Some are very wealthy and they partner directly with Stephen and I, and we'll build a portfolio together. Others, you just borrow our team and our team will do it for you. Or if you're starting with no money, we'll even show you how you can get started for under $1,000 to start crushing it in real estate. You got all those options on the website. So are we big believers in real estate? Yes, as long as you've got the right strategy. Thank you so much for watching this video. Listen, if you haven't already, go ahead and subscribe. Hit that button in the corner so that you and I, we can become even better friends. And you know what? If you want to come join Stephen and I at one of our live events, or you want to learn about the different ways that we can be playing in real estate together, check out the link, make sure you're familiar, we're always updating it. And in the Lease, download my book for free. If you want to learn more about how safe real estate can be and how to mitigate the risks that are there, then my book that I give you both in ebook and audiobook format can be a super useful tool for showing you how to crush it.